The US has been downgraded and markets are starting to freak out. But just like 2011, there will be opportunities, and today we discuss those along with earnings season. Yes, PayPal came in with an earnings beat, but it missed on metrics, down 7%. Qualcomm, an important semiconductor stock, beat again, but showed us that there are some issues with the future. And of course, this sent markets into a highly volatile period. We've closed now on the daily 20 moving average. More on that in today's show. So as volatility spikes under the hood, semiconductors have a second big sell on them, and bonds around the world start to shake, what do we need to be looking at? Let's cover stocks, commodities, and cryptos right now together. Well, welcome back everybody to the Daily Show, where we discuss markets around the world, including the macro, leading indicators, and of course, hottest charts. We've got all of those coming up in today's show, along with our key levels for the indices right now. But let's get into technology sell down, because it was all about semiconductors and all about tech being sold. The hottest market segments of the last couple of months were sold hard, and we saw defensives start to spike back up. So with this downgrade in the US, what traditionally happened in 2011? Well, when we saw the downgrade, markets did react very negatively to that. NASDAQ and S&P 500 fell and then held those lows for a period of time. Funnily enough, August and September tend to be some of the weakest periods of time for markets around the world. We also know that there were some asset classes that benefited from it. Treasuries actually went up over this time, though they are selling at this current period. And gold tended to do pretty well. Will it do the same in 2023? We'll look at the chart later on. Let's discuss some of the things we've talked about recently. Calls coming in way too hot. So is this a coincidence? I posted over on Twitter that it's probably not, and that we're seeing really a culmination of events like the straw that broke the camel's back. That's what's going on right now. Too many calls, not enough puts. The market was very cheap to hedge recently, and we've seen a lot of flows through some of these areas in the markets. We know that, of course, private clients flip positive, not necessarily a great sign for markets. Meanwhile, hedge funds have been purchasing out of control on large positions, and of course, we've seen institutionals basically flip negative in recent weeks. More importantly, we saw a huge transfer through the different market caps. Large caps turn negative, mid caps have been neutral, and small caps have been very positive in the last month. Which market lost the least over the last 24 hours? Well, of course, if you want to pause the video, you can have a guess. But yeah, it's going to be small caps. And small caps were the ones that were really not sold that heavily. In fact, they didn't even fall underneath their most recent support or demand levels. Let's get the update on sentiment at the moment. We saw a switch. Now, I want you to remember this date, the 19th of July. When we go and have a look at the NASDAQ later on, you might be surprised. We saw possibly a peak FOMO event at that time. To put things in perspective though, even if we go into a heavy sell here in August and September, we need to understand that this is actually very normal. So far in 2023, we've almost met all of the pre-election year data, which we'll talk about later on in today's video. But do remember that during these periods of time, by the end of the year, only one time out of 18 were we actually down, although August and September tend to be incredibly weak. Let's now take a look at volume across the board. And as we know, Qs were selling hard over the last couple of days. We broke out in the previous video. Today, markets reacted in a very heavy way, and we just got a late print that came through. So it shows us that although the headlines hit a little bit later on, somebody knew this was about to occur, and realistically, they traded it pretty hard. We also know someone knew treasuries, as we saw a huge triple short treasuries trade come through, and most likely they've just exited some of that position. Could there be a bounce in treasuries around this level? At least this volume would suggest that we're getting close to a bouncing zone, though we'll talk about that later on in today's video as well. And we've seen a huge amount of 3x funded trade FANG stock. Basically a first ever big large print that's come over here, and subsequently we've fallen off on the market. These big 3x funds tend to exit a few days later once they're in these things, so we'll be watching that very closely. So really, volatility across the board is spiking, and at the same time, we've seen a large trade on gold Will that happen again? Similar to 2011, will we get gold actually finding a bid over the next 24 hours? Well, it's at the right zone. And of course, we have stocks that are breaking down to very key levels that we'll talk about soon. Let's look at pre-election years. Do we expect this to happen? Well, like clockwork, as we mentioned, the VIX spiked. And yes, this is exactly where we expect it. We always talk about this. The volatility of August and September is famous. And we've been posting this over on our Twitter, so follow at FX Evolution if you're interested. I just did an update of the last 33 years, and you can see where we are at this present time, and of course what the VIX is starting to do. And it is starting to spike big time off this volatility. Should we get underneath the 20-day moving average on both the S&P 500, Apple, and NASDAQ, I think there could be some big moves ahead. And more importantly, there'll be a lot of activity for scalpers, day traders, and everybody else. Do we expect the volatility to lead into bearish or selling markets? Yes, generally we do, because of course we know in pre-election years, taken over the last 20 years of data, we tend to fall over these 2 months and then we rise back into the end of the year. Should you be afraid if you're an investor? Well, generally no, but this is usually an expected period and an expected thing to happen. The volatility of stocks is not disappointing this earnings season. AMD was actually expected to have a plus minus 8% move. And you know what? It got really, really close. In fact, by the time this today had closed, it was down negative 7%. So I guess really the options market kind of almost got that right. We've got Shop at the moment coming through. And at the time of this recording, I don't know the result. But PayPal, I certainly do. And of course, it was negative 7%. Do remember we've got Coin expected to be a plus minus 12. We've got Airbnb, Amazon, and AAPL. These will shape and define how the 20 moving average holds, and we'll look at those stocks very, very soon. It's going to be super important. Here are some other big names, just so you know, and currently in earnings beat data, we're at 69%, which is about 1% underneath our normal expectations. Beats 932, misses 417, but it may not matter if markets choose to sell through this 20 moving average. Sometimes at this point in the year, it's just really get rid of the first 80% of market cap, which closes this week. And then we just go into, oh, well, there's no big news for a little while. Let's sell and fade the market for now. Buy the rumor, sell the fact, bank some profits. Here are the unusual options activity. One of the biggest ones, I guess, that was noticeable was, of course, AMD. We had 1.1 million calls, 627,000 puts. But boy, oh boy, was this thing selling. 7.1% down. Semiconductors getting just destroyed across the board. And it was a really heavy trade on those. We also saw hyper stocks coming in a little bit weak. And of course, PayPal fell 3 and another 7 after hours. The amount of calls versus puts, still everybody is buying the dip. We've got calls 54%, puts 46, and total volume was well above the standard. I expect this to be the same way over the next couple of days. So volatility will continue, whether it's bullish or bearish. And I guess bulls will be looking for this to be bought the dip. Let's have a look at defensives. How did they go last 24 hours? Staples, healthcare, utilities marked up the top. Gold actually had a very bad sell day, so gold fell pretty aggressively into some interesting levels we'll talk about. And the last 5-day trade, gold fell super hard, along with solar and utilities. They're still the weakest on the 5-day, but this may be all about to change. And don't expect necessarily communications to be the best performer should we go through 20 moving average, as we mentioned. Let's jump into the charts and take a look at the US 2-year yields. We know that, of course, these have been spiking recently, but they're holding firm into both non-farm payrolls this week, which remember is at Friday before the market opens. Be there because that's going to be a big one. And then, of course, CPI next week on Thursday. We do expect CPI to probably post a year-on-year increase, and I guess most economists will be guessing that as well. What about the JP10Y? Continue to alert here. We're looking for 0.7. This is another issue with central banks around the world. And with JP, well, effectively the Bank of Japan changing the yield curve, this is a big deal. And if it gets to 0.7 and they start pressuring the bank, expect this to be another catalyst for potentially, all of a sudden we've got some negative news out there, even though it was in plain sight. Let's use this as an excuse. Now, what markets were selling off the most? Well, it certainly wasn't equal weight. This was a NASDAQ style sell-off. It was basically tech across the board selling the most. And we saw that in our heat screen at the beginning. We also saw that in defensives holding up through the session. So really at the moment, the last couple of weeks have been really mandated by the rest of the market coming through. And we see this with those flows that we discussed. The US 2000 was a super flow machine over the last couple of weeks, and really it held a lot better. The same with RSP or equal weighted. Let's go into whether this market's starting to freak out. Well, of course, junk bonds are one of the ways we see that. And we've got what we call an island reversal, a gap up and a gap down. That followed through the last session. Of course, if this continues down with the market, it usually means the bears are doing the right type of thing. If we get through 73.47, that's going to be a big deal for swing traders. So, of course, pay attention to bonds over the next 24 hours. And you will be wanting to also look at treasuries. You can see they actually found a bid near the close here, 96, and I think it was 96.54. If we grab a fib and we take a fib from the low to the high, this makes sense to one of the big levels, which is a 75 fib. It's not a fill gap, but I could see some reprieve here for treasuries. They're getting kind of cheap, and really, I think treasuries are a very interesting investment in this area. Of course, you've got to make your own risks and deal with all of that type of stuff, but it's not really a trade per se. I just think there's possibility of even lower treasuries down into the 90s, which would be an amazing level. And at this stage, this is one of kind of the three zones. There's a zone here, which broke. We move to the next area, which is interesting. There's 94. And then, of course, there's just the big 90s. So they're the three main zones we're looking at on the charts, and treasuries hit them over the last 24 hours, or at least hit one of them. Let's go over to Magma, which is Microsoft, Apple, Google, Meta, Amazon. There was weakness through this for the first time. Have we seen a new low? No. Have we gone through anything in particular? Not yet. But we will be watching, of course, this very closely to see whether buy the dip is really enforced. Now, remember I told you to remember that date, the 19th of July. Take a look at this. We have not made a new peak on Magma since that point. That was peak sentiment FOMO, okay? Peak FOMO. So even with fear and greed indices, you've seen them do a turn. So basically, this was peak FOMO. If that was the trap, we should not revisit those highs. And basically, we just revisited close to it, which is like the get out of jail kind of plan for Wall Street often. If we now see new lows, that's significant. Something we're looking at, and of course, we should be paying attention to over the next coming weeks. Consumer discretionary versus staples. This will be the chart to watch over the next 24 hours as we see Amazon and Apple. If this continues to weaken, it shows the market has turned defensive. And do remember, 1/3 of the US economy is consumerism. So if we're seeing discretionary spending not beat staples, that's not good. And that really led into a big sell in 2022. So just remember, this is a very important chart. Another one that could be a false break, and it looks like at this point in time, has been copper. So we saw the daily breakthrough here. We thought that might mean 4.12. Of course, weekly close is preferred, and weekly is getting smashed right back down, showing us that we still have demand destruction. And obviously the China news was not enough to continue to pump the market. The market really wants real results, not just fake or possible promises of the future. Though I do think Chinese stimulus will come. I have a feeling it's probably going to be mainly in October during their main yearly meeting. Let's look at oil. It's been up about 20% year on or month on month, which is of course causing problems for, I think, the CPI number. We're back at the supply for oil sellers. They would have been happy with the last 24 hours. That was a pretty good level, and of course a zone that people would be looking at. We did see a small time frame change of trend with a high, a low, a high, high, and a lower low. So in essence, if markets do rally here, I could see them being met by sell demand, and oil has become a little bit interesting around this level. Rallies, I think, to be met by sells, at least from a day trading perspective. The dollar bulled super hard, and it hit a few key levels. 103 is a potential target here for dollar index. And if we take a look at the weekly, we actually just slammed straight into that long leg doji over here. So this is a pretty critical level. It begins my new box that I'm looking at. But yeah, the dollar's been pretty resilient. There was one seller we looked at in here that got absolutely wiped out pretty quickly. And at this stage, we're just looking at bullish moves until it keeps going, until it basically sees a turn. No turn yet, and we're still moving into a critical zone. So basically, we'll watch it. We'll check out dollar index over the next couple of days and hours. GDX, this has sold a bit more than I thought it would. I felt like it would find a bid through here, but it didn't. So GDX sold pretty hard. As we saw with the unusual volumes before, we do have some big trades going into gold. Are they buys or sells? Based on the current action, I would say somebody has bought gold. The problem is it could still swing the bottom, although GDX did do a trend change. So I kind of felt like here's the level. It's a little bit deeper. I'd like to see gold find a bid over the next day of trade. We'll find out whether it does. And of course, we'll be watching. Gold spot fell into our zone, which is consistent with everything we've been talking about. So gold spot is reacting correctly, and it's moved back down into this area. We thought we'd get to about 1930, 1935. We've hit into that. Now we're looking for the smaller time frame turns. We haven't got one yet at the time of this recording, but we will be watching. And of course, subscribe if you're interested in that. At this time, we would need to see gold break above 1954, and that would be the turn. What I'd like to see it do is do something like this. Maybe hover, break down, bull back up, and allow us to get into maybe a bullish position should gold want to do it. I'm definitely looking for that, and I'd like to focus on it if we can in the next couple of videos. This is the one that everybody should be watching, the canary, Apple. A lower high followed by another test on the 20 moving average. Now at this point, 20 moving average has actually, since the breakout, been the best buying technique. 1, 2, 3, 4, 5, 6. We've had plenty of trades off the 20, which is the middle of the Bollinger, if you're not familiar with it. And basically this level is super key. Like this is where the bulls have been just absolutely ripping this market. Should we close underneath the 20 across a few things, it looks weak, and it looks like basically this could be a turn point for markets to go back to what we call mean reversion, which is the 20 moving average on the weekly. Now take a look at where that is. That's actually a pullback all the way back down to these highs. So it's about a drop of about 7% at the time of this recording on AAPL. A very big important earnings, and of course, we'll be finding out whether this stock is performing well or poorly by that point. Amazon is kind of similar. We've got an island reversal, gap up, gap down in the last 24 hours, and it just kept following through. A lot of stocks did this island reversal. So if anyone shorted on the open yesterday, it was pretty good, pretty consistent style trade, and certainly the right kind of place to do it. We now find Amazon coming down to pressure this critical area we've talked about a while, which is 126. If it gets broken below, it looks like we've got distribution. It looks like we've got basically the trade is in for mean reversion. And of course, Amazon is held up at this point by earnings. We'll find out whether the buy the dippers buy this very critical level, just like on Apple. Basically it's sitting on support. So the next 24 hours, the great thing for day traders and scalpers is they can jump in on the small time frames and figure out whether there's a buy the dip style in this market at the moment, or whether this is just purely selling across the board. We're going to know very, very soon. Let's move over to Tesla. Everything with Tesla is slow at the moment. Even the breakout was slow. So it broke to the downside. Theoretically, that pushes us towards 240 on Tesla. And I guess it's looking weak at this stage. Watch the reaction, watch how it moves. But at this point, it broke to the low. That's what it is. Let's move over to CQQQ, back down to support, similar to the 20 moving average. I would expect CQQQ to hold around this zone and some kind of maybe go sideways for a little bit. The Chinese market doesn't have to trade like the American market, but that's looking for stimulus. It's just not getting it yet. As we mentioned, PayPal's down about 7% in after hours. You can see here the post, 68.39. So it's sold that TP zone. It did get a little bit above, and I saw a few people saying, you should hold it. Well, for us, we were following PayPal for a while. This was a very, very big area. We know there's a lot of trade there. It won't be easy to get above that 79.19, but it doesn't mean I've lost faith in PayPal. All I'm doing is I'm looking for the next replication style trade. And I do think hyper stocks will present some amazing opportunities over the next coming months. And of course, we'll be looking at them closely. The German market got thrashed and it moved all the way back down to 16,000 and moved below it. This is something we will be looking at quite closely over the next 24 hours. And of course, it got basically all the way down to these lows, and we've just seen it post a low point. I'd like for it to probably keep breaking through and keep selling. Although if it does break to a new low and rally back above 16,150, bulls might be tempted to push it back somewhere around 16,300. So it's possible there's some okay bull and bear trades. Again, we're hovering right on that 16,000, although we did get under it. So German 40, right on that demand. US 2000, pretty strong. Didn't even go to 1947, which is currently the big level where the buyers sit. So yeah, US 2000 still has a bit of potential here in terms of the bulls just holding on. If we do get underneath this level though, expect it to go back to the most traded zone, somewhere around that just under 1900, 1896. Let's move over to the major markets now. And we'll go to indices first, and we'll go to the NASDAQ. And the NASDAQ actually fell through the daily 20. You can see here, the daily 20 has held this market since breakout back in May. And basically it's been a few times it's traded here. It traded a lower high. We saw monstrous trade volumes go through here. Big kahuna levels. If you're a bull, set an alert above. If this level gets cracked, we know it's a big deal. We're going to maybe even all-time highs. At this stage though, markets sold. They went pretty aggressive to the downside. We had a feeling this might be what's going on. And although I don't think this is through necessarily the 20s, because yeah, it is underneath, but of course the S&P isn't quite yet, which is usually the better read. This does mark a very important factor for Amazon and Apple. And of course, after that close, we should know direction and we'll know whether we're on for the potential of a mean reversion back to the 20, which is still about 7% away at this time of recording. Let's now move over to the US 500. And what we'll do is we'll go to SPX first. And SPX just sold, leaving a gap behind, filling this gap, which is nice to see a fill gap. There's so many that have been left behind. We will end up tallying these very, very soon. And we also know that it bounced off this little sell-off doji here. So yeah, I mean, I could see like again, rallies come through, but I'm going to show you the US 500 futures because this is where things get really interesting. And I've put some arrows on it. Here's the daily, here's the 20 moving average. You can see since breakout of the 4200 zone, it came back and hit the 20 and it's bounced it every single time. This time, however, we've got a very interesting point. We've closed below the demand, which initially got a rally. So we've already seen some buy the dippers kind of get slogged here, which is over here. You can see the buy the dippers came in and then all of a sudden it went sell underneath. Now we know that we're at the 20 moving average. We're underneath the demand, the initial demand. So really it's a little bit weaker than some of the other stories we've had. Could rips happen? Absolutely. 45.60 is kind of where we're thinking sellers may recommence, but this is a super important period. Watching the small timeframes here will be a big deal. We don't really have too much build at the time of this recording. It's too close to the end of the close. But if I was looking at levels, I would of course be marking out things like 45.30, seeing how the market reacts with that. If the market at this stage takes that high, then pullbacks might be met by some demand into the next level, etc., etc., etc. But what we do know is daily 20 moving average. That's the big one. If this closes below really heavily, and tomorrow we'll find out, so we'll find out basically in the next day of trade, we will know at least to some degree whether the buy the dippers have been completely taken out. And as we know with sells, they can be often very aggressive. So this is possibly the biggest sell level that we've seen in a while. And the main reason is because semiconductors continue to also weaken. And this is the second biggest kind of percentage trade that we've had. So we've had two massive percentage trades in really what has been a bull run with, I think, nothing that's over 3.5% until recently. So semiconductors taking a bit of a hit at all-time highs, another island reversal up here, gap up, holds for 3 days, doing basically nothing, then just big sell, 3.67, down another 0.4 in after hours. We remember to look at Bitcoin in the last 24 hours, and we kind of thought that we'd find some buyers around 29,250. We haven't really yet. We've hovered here, but we haven't really found the buyers. So we have the low, we have the high, we have the lower low, and then we have the higher high. So we've got a small time frame change of trend. We're not above 30,400, which is the big zone, but we did see that really nice rip. I'd like to see crypto and Bitcoin find some buyers in all of this mess, but at this stage, it hasn't just yet. Interesting zone, certainly one we're watching over the next little period. Do remember to follow the channel for all of the news because there's so much moving forward. And if we go through to Friday, you can see here we've got non-farm employment change and the numbers came in super hot for the ADP. So basically, although I don't pay attention to that number too much, it's showing us that maybe the US economy isn't weakening enough yet. And that might mean higher yields for longer, but more importantly, maybe even a re-acceleration of yields. Now, if we do see a re-acceleration of yields, don't expect gold to be very good in that market. This is a very tough time to kind of be looking at gold because you've got the counter of 2011, it was good, but 2023, we do have the problem of CPI. So remember, if we do believe CPI will spike and US2 yields go up, that may be a problem for gold, at least temporarily. Though I do think the metal looks pretty good in the next couple of weeks and months. So yeah, overall, employment, this is a big thing. 10th of August will be CPI, so make sure you've got that on your charts. And as we scroll down here, you'll notice that we have that at 8:30 a.m. New York time. If you enjoyed today's video, make sure to subscribe, smash that like button, guys. So much going on in these markets. Daily 20, a huge deal, one of the most used moving averages in the markets by almost everybody out there. Let's take a look what happens in the next 24 hours. I'll join you then. Bye for now.